So I think one of the reasons I was invited to speak today by my colleagues at the IFC is I've gone a long journey on IFC's own internal ESG and sustainability work. So how I'm going to cover today's presentation is firstly a little bit of the historical context, because it's good to know where this comes from, and that also addresses the woke criticisms. And then I'll go through IFC's own journey to build up ESG systems as a way to create business value in IFC's own portfolio. And then I'll show you how we're helping clients working with banks to issue green bonds, green loans, and then also supporting SMEs to build up their capacity and the real sector businesses on their sustainability journey. So firstly, the historical context, which I think is very important to remember. Yes, there are criticisms of ESG as a woke agenda, and I think it's important to ask why. And the why is, when you do ESG well, it's good for business, it's good for society, it's good for the environment. When you focus on the wrong things, it's not good for business, it doesn't really help society, and it doesn't really help the environment. We have more than 30 years of industry practice developing sustainability systems. And ESG is just an acronym for the 3 categories of issues and topics and practices that you could embed. It's there to help you remember the 3 categories of environmental, social, and governance. Where did this come from? So I'm a South African. I flew here from Cape Town yesterday. And actually, we can claim that ESG started on the continent, started in South Africa in the 1970s under apartheid. It was unethical for a business to be practicing under the apartheid laws. And so Reverend Leon Sullivan came up with the Sullivan Principles for international businesses operating in South Africa to have higher standards of labor practices, to not adhere to the national laws. It was the right thing to do, and it was good for business. And because it was so effective in helping companies develop their sustainability standards, there was something else that happened a decade later. It was the Exxon Valdez oil spill in the 1980s. So many of you may remember it. It was a massive environmental catastrophe, massive environmental impact from this oil tanker. It led to changes in the way oil tankers are designed, but it also led to a collaboration between investors and NGOs to develop the Ceres Initiative and the Global Reporting Initiative for sustainability disclosure. And their mission was to make sure that this would never happen again. And they used the Sullivan Principles as a basis. So fast forward, that brings us to 2000, and the Sullivan Principles and the response to Exxon Valdez were used as a basis for the UN Global Compact 10 Principles for Sustainability, which is a fabulous foundation to understand what you as businesses can be doing. So I can encourage you, as one of the first steps, you may be interested to become a UN Global Compact signatory and to report on progress. It's a very simple way to start developing a culture of sustainability in your business. So about this time, the IFC, as a development finance institution focused on the private sector, was starting to be impacted by reputational damage from major projects where something went wrong, whether it was impact on the health of communities, where it was impacts on the environment. We were targeted as one of the investors in those projects to get our house in order and make sure that environmental and social standards were adhered to. And through that process, IFC developed the IFC performance standards, which are a very robust set of environmental, social performance standards for private sector activities. We also have a corporate governance methodology that we use when we engage with all our clients. And this was the right thing to do. And there was a feeling that it was going to be good for business, but we didn't know yet. So over the next 10 years, we implemented the standards. We worked with other financial institutions through the Equator Principles. Now there are over 138 financial institutions globally that apply IFC's performance standards. And they have embedded these systems so well that they are starting to see the value, reduced risk, but also improved performance. So something exciting happened around 2010. IFC started actually looking at the data. Was there better financial performance from companies that we were investing in that had good ESG standards? And was there a difference with those companies that weren't applying those standards? And the answer was a resounding yes. We looked at 200 companies in our portfolio. We compared them with market comparators. We found significant financial outperformance for the companies that were leaders on ESG. So that was our first signal. And then we also saw significant underperformance financially of the businesses that weren't taking our standards seriously. And IFC, over time, through our engagement with companies, we will improve the performance on ESG of those companies, and then they will go on to reap the benefits of that improved performance. We've also tracked things like gender. So how does women on boards improve the financial performance of businesses? And it does, until you get to 80% representation. Then you've got too many women. So you need to have some men still on the board. You also need to create a culture in which women can be active leaders at the board level. That's a very important differentiator for that indicator. We've also seen that data around human rights policies, having a human rights position, managing water efficiency, having a sustainability strategy, and effective stakeholder engagement. These are all leading indicators that the company will actually outperform financially. And we can see a correlation with ESG, and we see evidence of causality increasingly, where we can actually link that to improved performance. So, where does that bring you today? So, my role, as was introduced, is I am the Africa and Working Groups Coordinator for something called the Sustainable Banking and Finance Network. It's a learning platform for financial sector regulators across emerging markets and banking associations. KBA is one of our members, long-running and very active members. And so we, as IFC, with this knowledge of what we've done over the last 3 decades, work with financial sector regulators and banking associations to build the enabling environment to support the financial sector, to support their clients, to do sustainability. And something really interesting that has emerged is we are seeing the business case come through. So in countries like China and Bangladesh, where they actively track the link between green lending and credit risk and non-performing loans, they see a big difference. So in Bangladesh, for instance, they report NPL ratio of around 8%, and they're now reporting that green lending gets them to a non-performing loan ratio of under 1%. So that's massive. And China, multi-year data has shown that they're seeing similar results in terms of that correlation. So we're helping regulators and banks to track that more effectively and to start leveraging their portfolio. And then if I bring it to the company level, what do you need to know as a company? I think what I've said today shows you the financial sector and the regulatory environment are all moving towards better valuation of ESG linked to financial and business performance. So how do you position yourself? You can access finance with your ESG credentials. IFC and other development finance institutions, as well as our partner banks like DTB, are working to provide that kind of preferential financing. We're seeing things like sustainability-linked loans take off in South Africa. That is a fast-growing trend. And the companies that are attracting that finance are the ones that report out on their sustainability commitment. They've chosen goals that are appropriate for their business, and they are committed to achieving those targets. Once you have that in place and you have your risk management in place, you have proper board commitment in place, you become a very attractive investment for financial institutions looking to do green finance. So if I can give you a few tips in terms of doing this well, make sure that you start at the board level, at the executive level. We've seen again and again, you can have a sustainability team, you can have sustainability champions, you can build up your systems, but you really need your executives and your board to be monitoring this issue actively and to be choosing the right sustainability objectives for your business that link to your competencies, that link to the risks to your business. If you're exposed to social risk amongst your customers or amongst your locations where you operate, you can address social risk through your ESG initiatives. If climate change is one of the things that's going to impact you in terms of physical risks, you can look at adaptation of your business, making sure that you're properly insured, that you've built the right infrastructure to protect yourself. But that is a very strategic decision. Which ESG issues are you going to focus on, And how are you going to report out on your targets? So that finally the punchline, when IFC was doing this research in our own portfolio and we saw this outperformance, there was other research being done by Harvard Business School using a very similar methodology. They've had very similar findings, but their follow-up research showed that if you focus on the right sustainability issues for your business, there's financial outperformance. If you focus on the wrong sustainability issues, there's financial underperformance. So that's a message to the executives. Get it right, report, show your credentials, and attract the financing that is looking to support you. Thank you.
Today's event is the first in a series of engagements we plan to hold with our customers, partners, policymakers, and shapers, and to have a meeting of minds on existing and emerging socio-economic challenges. We have intentionally christened this the DTB Economic and Sustainability Forum as an acknowledgement of the increasing influence of sustainability-related issues on the economy as well as on business performance and continuity. Today, I'm delighted to have us all in this room to share perspectives on one of the most pressing issues of our time, sustainability. The world is facing unprecedented challenges, from climate change to social inequality, and together, I believe we can engineer solutions that safeguards our people, the planet, and even profits. Sustainability has quickly become an imperative for any business of the future, so much that our operating models have to constantly evolve to remain relevant. To be sure, consumers are now more inclined to buy from companies that prioritize sustainability. Investors are also increasingly concerned about the long-term viability of their investments, and regulations are being tuned to enable the enforcement of ESG within business. It is therefore becoming increasingly clear that prioritizing sustainability will create value for all stakeholders. And I'm looking forward to hearing the perspectives of all our speakers today on this very important subject. We are glad that the government is leading conversations on some of these aspects, including driving the uptake of clean energy, actively promoting tree planting to increase the country's forest cover. All said, the sustainability conversation is clearly moving away from being the preserve of a few scientists and environmentalists to becoming a priority agenda, not only in policy circles, but in boardrooms and even homes. In fact, it can be argued that one of the hallmarks of the 21st century has been the accelerated adoption of sustainable practices as the world races to reverse the effects of centuries of environmental degradation before life as we know it is permanently altered. As businesses reinvent and re-engineer themselves in line with these developments, it is clear that we need more hands on the deck if we are to successfully implement the sustainability agenda. In this respect, as business leaders, we must involve our employees, our customers, partners, suppliers, and the society at large in this noble but extremely important and urgent course. Ladies and gentlemen, being mindful of the impact of these events on the society from which we draw our own sustenance, we at DTB are rolling out our sustainability strategy. Guided by the shared value principle, we are alive to the immutable fact that our long-term viability as a corporate citizen is intricately tied to the sustainable growth of every facet of the society. Ours is a two-pronged strategy that will include greening our own operations as well as enabling adoption of green practices among our customers and suppliers. Therefore, as I mentioned earlier, we will continuously hold more events like this one to ensure we collectively steer this sustainability conversation. We also welcome innovative ideas and are open to partnerships that will help move the sustainability dial forward. In this room, which I am told is named Tana River Room, offering a befitting metaphoric backdrop for this event, I am glad to have earlier met an eclectic mix of business leaders, policy influencers, and sustainability experts. I therefore look forward to what I believe will be a highly stimulating and insightful engagement.
So indeed, the world has been and continues to be daunted by several development challenges, and these range from increasing inequality to toxic wastes, energy crisis, food crisis, water crisis, climate change crisis, among others. Yet these challenges, we know them, but they continue being entangled in the pervasive global politics and policies. If you see how international development, politics, international relations, sustainability conversations are being nuanced at the global arena, you really wonder why we can't come to a constant of understanding that this is the path to go. And that kind of entanglement will continue. Again, these crises that our world faces are also as a result of the disequilibrium of the global economy in terms of access to means of production, access to trade, markets, and of course, access to financing. There's a global disequilibrium of the means to achieve all those. And that's, of course, leading to people arguing that it is our time to develop. You already developed on the back of our resources, on the back of a good environment, and now you're coming to tell us that don't use the same ladder that we used to climb. Yeah, so those conversations are also creeping in, even at academic level. There's a country next by where the president was saying, we can't eat trees. We have to develop industries, so let's go and cut those trees. But what are you doing to cure the damage that you've already done? So with that background of the challenges that the world is facing and the lack of nexus, an agreeable nexus between economic goals, environmental protection goals, and societal welfare goals, we really need to think through what we are going to do as a nation. But the first is to understand how do we cure the conflicts or the perceived conflicts between those three goals. It is therefore my honor to address you today on the importance of embedding ESG practices in businesses in Kenya. And as the umbrella body of the business community in Kenya, we do believe that businesses that embrace ESG practices are better equipped to navigate current and future challenges and long-term value for their shareholders. But this is not just merely a matter of the bottom line. Embedding ESG practices in businesses is very, very critical for achieving the nexus of those three goals I was just talking about on economics, environment, and societal welfare. It's very, very key. It's beyond bottom line. So we need to deepen our knowledge on the intersection of these three goals and how we can achieve them jointly, frictionless, but also understand the consequences of our inaction. While a growing number of firms are being evaluated by sustainability rating agencies on ESG criteria, little is known about these companies' experiences and their reaction to the entire process of being evaluated. And that's why, as KEPSA, we are more deliberately involved to help businesses improve their experiences and also understand the sustainability rating criteria. We acknowledge that uptake of ESG practices among businesses in Kenya and other developing countries is still low due to 3 key limitations that I want to just dwell on. The first one is low awareness and understanding of ESG issues and how to adapt businesses to conform. The second limitation businesses face is limited access to ESG data and business case information. Why is it important for my business? Particularly, if you've already invested heavily in brown technologies and we want you to green them, and the investment costs, and greening process also takes resources. So how are you going to build a business case for such a firm to really understand and see the business case for going green? And thirdly, lack of a package of incentives or regulatory frameworks to encourage the adoption of ESG practices. And so to spur the uptake of ESG practices, we recommend the following actions. First one is, let's invest in increasing awareness and understanding of ESG issues. KEPSA believes that businesses need to be educated on the benefits of ESG practices and the risks of ignoring them. But what have we done as KEPSA to address this critical limitation? We have established the Climate Business Information Network, which is a platform under KEPSA. The platform brings together businesses, policymakers, and investors in Kenya to drive climate action and promote sustainable business practices. Through the Climate Business Information Network, we have continued to create awareness and build capacity on climate change issues among businesses in Kenya and promote partnerships and collaborations between the public and private sectors to drive climate action. Again, the platform provides a range of services to its members, including access to information and tools for measuring and reporting on greenhouse gas emissions. Similarly, we intend to use this platform to establish reliable and accessible sources of ESG data and information, including disclosure frameworks and reporting standards. This would enable businesses to make informed decisions based on accurate and up-to-date information. We therefore invite collaboration and partnerships amongst all of you here, the development partners, government, civil society, and other businesses to sort of establish this kind of a data center, including sharing of best practices that you've come across elsewhere, pooling of resources, and coordinating all our efforts to achieve shared goals. The other recommendation we'd like to make is for us to develop a package of incentives and regulatory frameworks that would encourage businesses to entrench and conform to ESG practices. And while we do recognize that embedding these practices in our businesses is a long-term process, for instance, in some countries, this has actually taken 40 years. I remember cases in Denmark where I visited and they were telling us how they started doing this in the late 70s, and they've just gotten it right recently. But we don't need to take that long. We have best cases that we can actually borrow from and accelerate. Actually, we hope to achieve a net zero pollution by 2050. Between now and 2050 is in another 17 years, or is it, do I get it, 27 years? Most of us will be still alive. Eh? So we hope to achieve that and see it happening. So our conversations then with the policymakers is to develop a package of incentives. This could be tax, this could be regulatory regulatory frameworks that actually make it easy for businesses to adapt. Then lastly, what we have done therefore also on that is that we've also established Sustainable Inclusive Business Kenya. It's called SIB Kenya, which is a knowledge center under KEPSA. And through this, we have been supporting businesses in Kenya to adopt sustainable business practices by finding a balance between people, planet, and profits. We hope we can continue doing this until we reach that goal. We are keen to support businesses again through SIB Kenya in integrating circularity to achieve sustainable manufacturing by use of wastes that are generated from these industries, as well as ensure a reduction in the GHG gases. As I conclude, therefore, I believe that we're actually on the right track as a country, and that embedding ESG practices in business in Kenya can create value for companies and societies while promoting long-term sustainable growth. I therefore encourage companies to engage their stakeholders, involve your employees in these conversations, involve your customers in these conversations, your suppliers, the local community where you are doing your business, to identify sustainability issues around them and opportunities, then invest with them to help accelerate the adoption of these practices, even in their own houses. By understanding their needs, therefore, and their concerns, we as companies will be able to begin to develop more effective sustainability strategies to meet the expectations and that of the world we live in. Thank you so much, Asante.
As DTB then, ladies and gentlemen, we are targeting to achieve net zero status in terms of our own operation and footprint before 2030, which is far ahead of any commitments that have been pronounced in this part of the world. And I must say that is in line with our global AKDN aspirations, and Dr. Rakani there can confirm that that is something that as a family of AKDN, we want to achieve and do our contribution to this planet. We are also committed to growing our green loan portfolio to start at more than 25% of our total lending by 2030. And that is interesting because it will mean at some point that when we are discussing loans, we are going to be discussing sustainability. And though we would want to make profit, if what we are going to be funding is actually going to be something that contributes to making the world less sustainable, we are going to have a conversation. And I want to say that increasingly, that conversation will likely lead to, no, we cannot do that. And that is going to be real. So we hope that we are all, and we shall all work together to ensure that we are not only making profits, but we are leaving the world a better place than we found it. And we shall contribute through our loan portfolios to ensure that you do that, but through the same loan portfolio, say, maybe we can't do that because of what you're going to do in terms of the environment. So to catapult the growth of the entire green economy, we look forward to working with partners to develop wholesome green solutions, as well as to increase the number of green vendors within our supply chain portfolio, so that at least 50% of our procurements in value terms are sourced from supply chain who are actively measuring and reporting their carbon status. And I finish. At our Much More Than Trees initiative, DTB has already planted over 1 million trees. I know we planted them quietly. They are there. People like Chizad lead in these initiatives. But we're also saying that in those 10 years, as we do the stuff we're talking about, we're gonna be planting another 10 million trees. And we work together with our staff, with yourselves, to ensure that we actually do that and achieve that. And I'm glad I can see Nation Media Group here. We can partner because I know you guys have been involved quite a bit in doing this, and we can actually work together to ensure we can even double or treble that number, because there's a lot of land available for us to do that. As we undertake these initiatives, we are fully vested with the aspirations of our principal, the Account Development Network, which has committed to be carbon neutral by the same period. So, ladies and gentlemen, I would like to close by saying future generations are looking to us today to take actions that will bequeath them a healthy planet and a life of dignity for all. After all, ladies and gentlemen, as a wise Native American once said, when the last tree is cut down, the last fish eaten, and the last stream poisoned, only then will we realize that we cannot eat money. And that is actually very, very, very critical. In fact, President Obama himself once said, we are the first generation to feel the effect of climate change. But, and this is the point, we could also be the last generation who can do something about it. So shall we all commit beyond making money? And we must make money because that's why we're in this room. But can we commit that we shall make that money in a sustainable way so that we bequeath this planet to our children better than we found it? If we all do that, and if everybody does that in their own retro space, then 1 + 1 + 1 will be equal to a better planet. That is why we are here, ladies and gentlemen, and I thank you very much for listening. Thank you.